Hi everyone. In this video, I'll be talking about activity based costing, which is an important topic in performance management paper of ACCA. Whoever has completed management accounting paper, you would theoretically know what is activity based costing. But as of PM paper is concerned, you have to do all the calculations. So we will be looking at an example in detail as well. So, management accounting, you would have learned a traditional method of costing that is absorbing your overheads into the product. Those traditional methods would have been absorption costing. You would have had two things, absorption costing as well as marginal costing. Basically, the difference between two is that under absorption costing, you will be valuing the products, that is, you'll be charging the overheads to the products based on the volume of production in units or hours. And as per marginal costing is concerned, you will be valuing the products based on the variable cost and you will be charging the fixed cost as a period cost. So this was the difference between absorption costing and marginal costing. Though these are useful methods, comparatively we have a modern approach that is activity based costing. Here under absorption costing, you would have used a single overhead absorption rate in order to absorb the overheads into the product cost, right? But under activity based costing, you will be absorbing the overheads into the product based on the cost pool. You will be identifying the cost pool to which that particular activity is belonging to, and then you will absorb it into the product based on the cost driver. So, what is the difference between this cost pool and cost drivers? Cost pool is the activity that consumes the resources and for which you will identify and allocate the cost. And cost driver is normally the factor that is going to influence the level of cost. Now, if we look at the example in detail, you will be better understanding with this concept. So I'll share the screen. Okay. So this is the example I've taken in order to explain you. Now, here I have three products, that is A, B, and C. Three different products are being produced, and I also have a total column for this. So now basically first I'll tell you how we are going to do this as per the absorption costing, and then I'll explain you the difference between absorption costing and activity based costing. So under both the methods, we will absorb our overheads and find out the total cost of each product. Okay, then it will be better to understand the differences. Basically, now what is the information we have? We have three products, that is A, B, and C. So here you have production and sales units of 40,000 units under A, and product B 25,000 units have been produced and sold. And C product 10,000 units are being produced and sold. So totally you have 75,000 units of production and sales units. Then you have been given direct material cost per unit for all the three products, direct labor hours per unit for all the three products, and machine hours per unit, number of production runs, number of component receipts, and number of production orders. So these are the information we have been given. Then we have also been given direct labor is paid at $8 per hour. So how many hours actually the products are going to incur in order to be produced? Direct labor hours per unit for producing product A is 3 hours, and for B is 4 hours, and for C is 2 hours. And direct labor is paid at $8 per hour, right? And you have overhead costs in the period are expected to be as follows. So you have setup cost, machine cost, goods inwards, packing, and engineering cost. So you have a total of 1,700,000 as your overhead cost. Now, basically, we'll go with the first thing, that is, we will calculate our total cost of the product A, B, and C based on the normal absorption costing. That is a traditional method of performing the absorption costing. So, under your absorption costing, we will be performing the costing for all the three products A, B, and C. Now, what are the costs that we will be including for calculating the cost of the product? First one, the informations that we have are direct material cost per unit we have, direct labor hours per unit we have. So these are the direct expenses we have. Then we have our overhead costs of around 1,700,000. Now first we will include our direct material cost, right? So starting with direct material. So how much is the number of units that are being produced? It's around 40,000. And what is the cost per unit? It is $25. So for product cost of A, it's going to be $25. And for B and C, it's going to be $20 and $18. Okay. Now then, after your direct material cost has been included, you have to include your direct labor cost. So direct labor cost, how will you calculate? You have direct labor is paid at 8 per hour. That is $8 per hour. How many hours they are being the laborers are going to work for one unit? So direct labor hours per unit for product A is 3 hours. And 3 hours at $8 will give you the direct labor cost for product A. So 3 hours into $8 is $24. And then $8 into 4 hours is going to be 32, and $8 into 2 hours is going to be $16. So far it's very simple. Direct material and direct labor, we have included the cost per unit. Now we have our overhead cost. Overhead cost is around 1,70,000. Right? Now we have to find out an OAR. How will you absorb your overhead cost into each and every product? We have to find a overhead absorption rate. So how will you calculate an overhead absorption rate? You will take this overhead cost of 1,700,000. This is going to be a budgeted cost divided by your labor hours. So the question is asking you unit cost of each product using traditional approach based on labor hours. So you need a basis on which you can absorb your overheads into the product. So this is your overhead cost. The basis in which you're going to absorb the cost into your product is labor hours. So now basically we have to find out how much total labor hours we have. So it has been given 2,40,000. That is 240,000 is going to be your total labor hours. How would you have obtained the 240,000? 3 hours of labor hours per unit, and total production of product is 40,000 units. So 40,000 units into 3 hours will give you 120,000. And then you have 4 hours into 25,000. That is 4 hours of direct labor into 25,000 units. So that is going to be around 1 lakh. Then you have 2 hours of 10,000 units. So which is going to be 20,000. So it's going to be 2,40,000 total hours, right? That's how you have derived at this total 2,40,000 hours. Now we'll find out OAR, that is overhead absorption rate. This is a single OAR which we are going to find out for calculating the product cost based on absorption costing. That is the traditional method. So the basis on which we are going to calculate our OAR is labor hours, total labor hours. So how much our OAR would be? So it's going to be around $7.08, right? So this will be based on direct labor hour. So your overhead absorption rate has been found based on your direct labor hours. So the basis that we have taken is direct labor hours, and we have found out the total labor hours that has been taken for product A, B, and C in order to produce. And then we have found out our overhead absorption rate of $7.08 dollars per direct labor hour. Now we will utilize that and absorb our cost. So overhead cost being absorbed into product A, B, and C. So now basically we know the basis in which we are going to absorb the cost, that is direct labors, right? So the overhead cost has to be absorbed into the product A, B, and C based on labor hours. And you know per labor hour is $7.08. Now how many hours it's taking for product A? Direct labor hours per unit is actually 3, and for B it's 4, and for C it's 2. Now we'll calculate the overhead cost for product A. 7.08 into 3 hours, it's going to be $21.24. Okay. And then we have how many hours do we have? Direct labor hours for product B is going to be 4 hours. So 4 hours into 7.08, it's going to be 28.32. And then 7.08 into 2 hours is going to be 14.16. Thus, calculate the total. It's going to be 70.24, and so it's going to be 80.32. 1 minute. Okay, it's going to be 80.32, and it's going to be 48.16. So this is the total cost of each product. That is product A, 70.24, product B, it's 80.32, and product C is 48.16. Now, this was the unit cost of each product based on traditional approach, that is absorption costing method. So we have taken our overhead absorption basis as labor hours, and we calculated our overhead absorption rate as a single overhead absorption rate, and then we absorbed our overheads into all the 3 products A, B, and C based on the OAR, right? And we have identified the cost of each product at 70.24, 80.32, and 48.16. Now we will move on to ABC method, that is activity based costing method. So we have to find out what are the cost drivers, how we will calculate the cost absorption costing based on this. Now, under activity-based costing method, first step that we have to do is that we have different overhead costs, right? We have setup, machine cost, goods inwards cost in this question, and then we have packing and engineering cost. Now, what we will do, we will find out the respective cost driver for it, and we will have to find out cost per activity. Now, the first step that we are going to do here is that we have the different types of cost, that is setup cost, mission, goods inwards, packing, and engineering. And the total cost with respect to that are given here. Now, what are the cost drivers? So, as per this question is concerned, we have been given information relating to mission hours per unit, number of production runs, number of component receipts, and number of production orders. So these are the cost drivers. Now, to the respective cost, we will allocate the cost drivers first. Now, can you judge what will be the cost driver for each and everything? So first taking setup cost. Setup cost is nothing but once you are going to start your production, before the starting of production, the machine has to be set up. It has to be ready in order to start your production, right? So this will be normally dependent on which factor of these listed here. So machine hours per unit, no. Number of production runs, yes. So if you're going to set up your machine in order to produce, this can be dependent on number of production runs. So the cost driver for setup cost will be number of production runs. Then mission, you can directly say it's going to be mission hours as per the question that has been given, right? So basically, what is this mission hours? If you're going to be a production department, normally you're more dependent on the machine. That is, you have some labor who are going to operate the machine. But yet, for example, if you're into a production of a product which includes molding of that product, if you are going to make some statues, you need molding and painting. For example, then there are the two divisions, molding and painting. Molding might be more of mission intensive because it requires more mission hours than your labor hours. But painting, in the other hand, will require labor hours more. The labor have to work on their painting more than the machine hours, right? So, if machine hours are going to be more, it's going to be called as a machine intensive division. And if the labor hours are going to be more, labor are going to work more, then it is called a labor intensive division. So now the cost is for the machine. Then you can take your cost driver as machine hours. Then you have goods inwards. In your question, you directly have this particular thing called number of component receipts, which means how much components are actually entering your warehouse. Then goods inwards could be taken as cost driver for goods inwards would be number of component receipts. Now then you have packing and engineering. Packing is also only based on the number of orders that you have produced. Only based on that you will be packing. You cannot pack something that you have not produced, right? So number of production orders, and for engineering also it's based on your production. So these can be based on the number of production orders. So these are the cost drivers that we have identified now. Fine. So setup cost, the cost driver is number of production runs. Mission, the cost driver is mission hours. For goods inwards, the cost driver is number of component receipts. Packing, it's based on number of production orders, and engineering based on number of production orders. So these are the particular drivers based on which you're going to allocate your cost. Now we will find out what is the cost per activity. Now what's your total cost here? It's around 140,000. And what is the number of production runs you have? Total number of production runs? You have around 40 production runs. So 5 production runs for product A, 10 for product B, and 25 for product C. So normally from here you can understand product C is going to have more production runs, right? So the total production runs were 40. Now cost per activity will be 1,40,000 divided by 40 production runs is equal to around dollars 3,500 per production run. So this is your cost per activity. Then you have mission hours at 900,000. This 900,000 is dependent on your mission hours. How much is your mission hours here? 2 mission hours for product A. For product B, it's 4 mission hours. And for product C, it's 3 mission hours. So totally, it's going to be 2,10,000. How did you arrive at this? 2 mission hours per unit means how many units you're going to produce? 40 units, 40,000 units. So 40,000 into 2, it's going to be 80,000. Then you have 4 mission hours for product B into 25,000 of production units and 3 mission hours into 10,000 of production units. So you total you have to 10,000. That is 2 lakh 10,000. So how much this going to be? So this is going to be dollars 4.29 per mission hour, right? Then you have goods inwards, that is number of component receipts. It's going to be total cost of goods inwards is 2 lakh 80,000. And how much number of component receipts? You have 160, right? Now we will divide that. 2 lakh 80,000 divided by 160. So it's going to be 1750 per component receipt. Then you have packing. Packing, the total cost is 200,000, and packing and engineering, we are going to base it on the number of production orders. So how much do you have as a production order? 50 production orders are there. So we will find out the cost per activity. 200,000 divided by 50 and 1,80,000 divided by 50. So this would amount and so it's going to be 3,600 per production order for engineering cost and dollars 4,000 per production order for packing cost. Now that we have found out our cost drivers, we found out, so we had in our question, we had what are the overhead costs, that is setup cost, machine, goods inwards, packing and engineering. Now we found out what is the actual factor that is going to influence the level of cost, right? So the total cost we had, so we are finding out the factor that is going to influence this level of cost. So what are the factors? It's called cost drivers. So number of production runs will be based for setup cost, and mission cost will be dependent on mission hours. Goods inwards based on number of component receipts, packing, number of production orders, and engineering also on number of production orders. Now we have found out the cost per activity, right? Now we will allocate the cost. So for product A, we know how many hours actually they have incurred. So setup cost is based on the number of production runs. So how many hours of production runs? Sorry, how many number of production runs actually for product A, B, and C? It's going to be 5 number of production runs for product A, 10 production runs for product B, and 25 production runs for product C. Now we know what is the cost per activity. That is $3,500 per production run. Now we will multiply with that and find out the setup cost. So 5 production runs into $3,500 will be 17,500 for product A. So this is the total setup cost for product A allocated to product A. That is 5 production runs which were basically given in the information. So number of production runs that are going to be incurred for producing product A was 5 runs, and you had found out the cost per production run, that is 3,500. How did we find out? We found out by utilizing this cost driver, that is setup cost will be dependent on the number of production runs. So the total cost was divided by the total number of production runs. So total cost divided by total number of production runs for the all three the products, and then we found out dollars 3,500 for one production run. Now how many production run actually for product A? 5 runs. So 5 runs into 3,500 per production run will give you 17,500 cost for product A. Then we had 10 production runs for product B. So 10 into 3,500, you're going to have 35,000 for setup cost for B. Then we had 25 production runs for product C. So this is going to be around 87,500. So these are the setup costs. So what is your total setup cost? It was 140,000. So this 140,000, now you found out per production run cost, then you multiplied with the number of production runs actually each and every product is going to uh, actually utilize, and then you allocated that cost based on the number of production runs. So we have allocated the 140,000 into 17,500 for product A, 35,000 for product B, and 87,500 for product C. Now we have mission cost. What was the total mission cost? It was 900,000. And uh, for one mission hour, it was $4.29. Now we'll go back to our information. So how many mission hours totally? It was 210,000. So I told you how we got 2 into 40,000 will be 80,000. 4 into 25,000 will be 1 lakh, and 3 into 10,000 will be 30,000. So a total of that will give you 2,10,000. Now this 2,10,000 has to be allocated here. So you're going to calculate the cost. Now, what is the cost per mission hour? 4.29. And you know the total number of hours. Now we will calculate. So 2 hours into 40,000 units for product A, right? It's going to be 80,000 units into $4.29. This is going to be around 3,43,200. Now, these were the number of units that were produced, and number of mission hours was number of mission hours was 2 hours, and the rate per mission hour has been multiplied, and we have got the cost for product A. The same way we will do it for the other two products. So 4 hours into 25,000 units into same $4.29. Then we had product C, which had incurred 3 mission hours into 10,000 units. So same $4.29. Now this amount would be so this is going to be around 4,29,000, and this one around 128,700. Clear so far? So we have allocated our setup cost and mission cost for product A, B, and C. Right? Then what are the other costs we have? We have goods inwards cost. So what was the total goods inwards cost? It was around 2,80,000. And we had found $1,750 per component receipt. So how many component receipts are there? It's around 160, and 15 component receipts for product A, 25 for product B, and 120 for product C. Now we will allocate it based on that. So 15 component receipts for product A. So we will calculate it based on component receipt rate per component receipt, and then 25 for product B and 120 for product C. So these were the number of component receipts. So with this, we are going to multiply the rate per component receipt, and we are going to finally arrive at our goods inwards cost. So this was our setup cost, this was our mission cost, and this is going to be our goods inwards cost. So how much is this going to be? It's 26,250. $43,750. 2,10,000. So we are done with our three costs, that is setup cost, machine cost, and goods inwards cost. Then we have our packing cost and engineering cost. So packing cost and engineering costs are going to be dependent on your number of production orders. So the number of production orders were 15 orders for product A, 10 orders for product B, and 25 orders for product C. So totally it was 50 orders, right? And then what was the cost per activity that we found? It was $3,600 per production order. Now we will calculate that. So packing cost was, number of orders were 15 and the cost was 4,000. See, for packing, $4,000 per production order, and for engineering, it was $3,000 per production order. But the number of production orders are not going to differ. So it's 15 into $4,000, 10 into $4,000, and 25 into $4,000. So these are basically the number of production runs into cost per production run. And here it will be same 15 into 3,600, 10 into 3,600, 25 into 3,600. So these are the product number of production runs for each and every product, and then cost per production run. So this is based on your engineering cost. So why is that differing? Packing cost was 2 lakhs and engineering cost was 1,80,000. But the number of production orders that you took were 50. So you had got cost per activity at $4,000 per production order for calculating packing and $3,600 per production order for calculating engineering cost. Right? Now we will calculate the total cost. So this is going to be around 60,000 and this one 40,000 and 25 into 4,000 is going to be 1 lakh. Then you have your engineering cost, 15,000 into 3,600. It's going to be 54,000 and 36,000 and 25 into 3,600 is going to be 90,000. 1 second. Okay. So now we have arrived at we have actually observed our overhead cost into product A, B, and C based on their cost drivers. So what we did so far under ABC method, under our absorption costing method, we actually found out a single overhead absorption rate at $7.08, and then we absorbed our overhead cost into each and every product A, B, and C, right? But under our activity-based costing method, we actually took our cost. We found out what is the a factor that is going to influence the level of cost. So setup cost was 140,000 means we found out what is the cost driver. So it was number of production runs. Then we found out cost per activity based on the total number of runs. So for each and totally for absorption costing, setup, machine, goods, inverts, packing, engineering, all together we took one overhead absorption rate and then absorb these costs, total cost into the product A, B, and C in a proportion, but then based on the overhead absorption rate. But here we are going to find out overhead absorption rate based on the cost per activity, and then we are going to allocate it based on the cost driver. So for setup cost, we actually allocated the cost, absorbed the cost into product A, B, and C based on the number of production runs. And then for the mission cost, we actually absorb the cost based on mission hours into product A, B, and C. Same way, goods inverts cost, we actually absorb the cost into product A, B, and C based on number of component receipts. And then packing and engineering, we actually absorb the overhead cost into product A, B, and C based on number of production orders. So now we have absorbed the cost into product A, B, and C. Now let's arrive at the total overhead cost. So what is the total overhead cost here? For product A, it's going to be 17,500 plus 343,200 plus 26,250 plus 60,000 and 54,000. It's going to be 500,950. And then we are having our product B cost. It's going to be 583,700. sorry, 583,750. And then we have our product C, 616,200. Now we have arrived at the total overhead cost. Now let's find out the average overhead per unit. So now what is the total overhead cost here? It's going to be 500,950 and 583,750 and 616,200 for product A, B and C. Now what were the number of units that we had produced and sold? It was 40,000, 25,000, and 10,000, right? Now we have to find out average cost per unit, average overhead per unit. So far, we are calculating only the overheads. We are not taking our direct material cost or direct labor cost. Now, average overhead per unit is 500, 950 divided by 40,000. It's going to be $12.52 per unit. And then 583,750 divided by 25,000, I guess. Yes, 25,000 and 10,000. So divided by 25,000, we get $23.35. And then 616,200 divided by 10,000. It's going to be $61.62. Now, this is the average overhead cost per unit. So there, if you take under absorption costing, we had found out overhead cost per unit at $7.08 and we had got 21.24, 28.32 and 14.16, right? But here, that's not the case. We have found out each and every setup cost, machine cost, each and every overhead. We had 5 overheads and then totally we took the total cost and then divided by based on a basis, that is the direct labor hours, and then we got our overhead absorption rate. And then here also we had taken the basis as labor hours and we multiplied our overhead cost per labor hour into the number of labor hours for each product A, B and C. But that's not the case here. We are actually doing it in an appropriate way. We are going to allocate that cost based on each cost driver and we are going to have to a maximum extent, the appropriate costs are going to be absorbed into each product, right? Now we have absorbed our average overhead cost into each and every product. So this is the average overhead cost per unit. Now we will bring forward our direct material cost and direct labor cost. So what was it? Same thing, whatever we had taken here. So direct material cost and direct labor cost, we will take the same cost, 25, 20 and 18 for A, B, C, that is direct material and direct labor cost. So that was $25 and here it was $24. And direct material cost for product B was $20, 32 and it's going to be $16. Now we will find out the total unit cost. 12.52 plus 25 plus 24 is equal to 61.52. This is your total unit cost for product A. Then we have 23.35 plus 20 plus 32, which is 75.35. And then we have 61.62 plus 18 plus 16, which is 95.62. Now, if you see, we have a difference between our absorption costing cost and total cost of product and activity-based costing. Here, we have seen that we have got product A, product B has the highest cost and product C has the lowest cost of a product, cost absorbed into a product. But as per ABC costing, we have product C has the highest cost and product A has the lowest cost. Here, actually, you can find activity based costing is appropriate because we have seen almost our labor hours and our production runs, our component receipts, everything were higher as per product C. We have had component receipts higher, and then component receipts was higher in product C, and our production orders were higher in product C. Production run was higher in product C, right? So, based on this, the number of production runs, component receipts, production orders, everything were higher in product C. So, obviously, product C would have incurred more of overhead cost. So, allocating the cost based on a single OAR cannot be appropriate because this is going to make a proportion into A, B, and C, and then you're getting a unrealistic value for B, B being the cost incurred more, right? So comparatively, this is why we use ABC because this is more realistic than absorption costing. So as per our number of production runs, number of component receipts, and number of production orders being higher in product C, now our assumption becomes clearly correct when our cost in absorbed into product C is higher, that is 95.62, right? So this is the basic difference between our absorption costing and ABC costing. Hope you're clear with the workings of activity-based costing. In the next video, I'll be sharing about target costing. Hope this was useful. You can work out this sum again for clarity, and you can post your comments, and whether you have any doubts, you can post your doubts in the comment section. You can also follow me on LinkedIn for more updates. Thank you.